Making the simple complicated is commonplace. Making the complicated simple, awesomely simple, that's creativity. Charles Mingus. My friends, as those of you who've been with us a long time know, that is what we strive to do every single day, is to make the complicated marketplace simple, particularly with our entry points. Those are primarily the weekly vertical crossovers. We have a great training for our subscribers today. We're going to have at the end of the video today the price percent oscillator training, but we have a special training for our subscribers. Be wary, very wary of profits. I want you to have that. It's in your show notes. If you're not a subscriber, go to chartingwealth.com, sign up for free. Just put in your name, email, address. That list is never spammed, never shared. It is for you. Now, let's talk about what's going on. The only thing up for the day on our charts is the S&P 500. So let's jump into things first, see what these markets show us. Let's keep it simple. Remember, we follow trends. Trend following, we have found over and over and over again, is what works. If you're out there wanting to be a short chart trader, that is a day trader looking for anomalies and inefficiencies in the marketplace, good luck as more artificial intelligence comes online. But if you want to be into trading for the long term, I suggest you start practice trading with us on a daily basis following the trends. The trends are the trends. Remember, the trend is your friend until the end. Now, let's look at what's going on. We have a green up candle forming for the week. Of course, we are 4 days into the 5-day candle. Look at that price percent oscillator hiking up, derivative oscillator still going up. Green up candle, price above the 2-day, well above the weekly. Quite beautiful. Let's go to the 2-day. What does it show us? Again, shows us a strong 2-day candle. That prior green up candle representing Monday and Tuesday. The latest one representing Wednesday and Thursday. Look at that price percent oscillator moving away from the red signal line and the derivative oscillator gaining upward momentum. We had the jumping in point with that 2-day recross back on the 2-day candle ending Monday, the 3rd of August. The jumping in point somewhere around the $326.50 mark. As high as what? As high as $349.90 in just those few days. Is that not beautiful? Yes, it's beautiful. What do we see on the half-day chart? Now, up in the morning and then a pullback, a slowdown in the up movement in the afternoon. Price is still decently above the 4-hour or the half-day chart, well above the 2-day and well above the weekly trend lines. We see the price percent oscillator heading up. Now look at the derivative oscillator end of the day, losing a little bit of energy. But again, we're primarily concentrating after we enter a trade on the 2-day and the weekly. Remember, the larger the chart, the larger the moves. That's why, again, all things being equal, the market tends to move in the direction of the largest chart. Always remember that. Doesn't mean it'll always, because price does change. We do have crossovers. But again, watch that price percent oscillator in particular. Now, let's move to the Qs. What's the Qs? The Nasdaq 100, the tech stocks, down for the day just a little bit, 0.31%. Look at that nice big green up candle, price percent oscillator heading up, derivative oscillator heading up. Go to the 2-day chart. How did the latest 2-day candle end up? Look at that. Blasting above the trend, the Bollinger Band. Look at that nice wick on top, nice big candle, well above the 4-hour, 2-day, and weekly trend lines. Price percent oscillator heading up, derivative oscillator heading up. What do we see on the half-day chart? Similar to what we saw in the S&P, up in the morning and a bit of a pullback in the afternoon. Price is above the 4-hour trend line half-day. I tell you, old habits die hard, don't they? Particularly for me. The half-day, the 195-minute chart. And we, of course, I just redrew that trend line to try to connect 3 of the most recent candles, and we can see where it blew through there. Now that I've redrawn it, updated it, price percent oscillator flat, derivative oscillator peaked, back on the afternoon on Wednesday. So again, we see that losing some energy. But if you're in that 2-day recross, which occurred back on last Friday, things have done quite well for you. What was the jumping in point? Is around $278.60, something like that. What is the high? $293.85. That's beautiful. So again, pay close attention to the 2-day and the weekly. Of course, always, as we say, all the charts all the time. Pay attention to what's going on in the 4-hour, but what's ruling is the 2-day and the weekly. You always leave those short charts. Let them advise you, but concentrate more of your energy and decision making on the 2-day and the weekly. And people say, well, how much? How much? Tell me exactly when I'm supposed to get out, exactly what I'm supposed to do. My friends, we live in a dynamic marketplace. That is what the entire training today is about, being wary of profits. Anybody who tells you, hey, I got the secret as to how you can make millions in the market, they're lying to you. They are literally selling you a fake elixir. It doesn't exist. Why doesn't it exist? Because it is a complex system. It has inputs by the millions. It is a self-correcting system. You have people all over the planet that are making their own decisions for their own reasons. That's why the market is dynamic. That's why it's so exciting. That's why we train daily. That's why we do what we do. There is no magic bullet, except for maybe the jumping in point for our trades when we have that weekly vertical crossover. It doesn't always work, only 12 out of 13 times this year. So again, the real thing that we practice on over and over and over again is when can you use the 2-day recrosses? And also, how do you know when to get out? That's such a key. How do you learn that? You learn that by learning the personality of the ETFs and the stocks that you track on a daily basis. Learning this time of year with this particular stock, when I see a 4-hour or half-day cross going in the opposite direction, coupled with a penetration of the 2-day trend line, I'm out. How do you know that works for that particular stock? Because you practice traded it numerous times. You've gone back and backtracked it. You figured out what the key is to help you make the right decision to follow that trend as long as possible. Or maybe you keep it super simple and you say, hey, the average move in this stock up at this time of year is 2.83%. I'm going to be happy with a 2% move in and out. That's it. Maybe that's what you do. But you have to practice on the stocks and ETFs. They're individuals. They're just like family members. They all have their own personalities, their own quirks. They work their own way. Let's keep moving through these charts. We're going to 20-year bonds. They were down pretty big for the day, 1.70%. And of course, do we like that? Of course we do, because we're in an inverse trade, a 2-day recross going down. Look at how we are entering into our 3rd week of down movement after we had things sort of spring off the red signal line. And we have a red down candle, deeper low, price percent oscillator hiking over, going down, derivative oscillator gaining downward momentum. Now, for those of you who don't know what I'm talking about when I say, hey, we like things going down. We like things going up or down as long as we can read the chart. Why? Because there are things like inverse funds. What is an inverse fund? TBF. What is that? That is the ProShares single short. It's going up while the underlying TLT is going down. Yes, that's what inverse funds do. Puts do the same thing. When people say shorting the market, they're talking about making money when the market goes down. You need to practice trade these things also. Second thing I'm going to put at the end of the show today is inverse funds. How to make money in your practice trades when markets crash. You're going to get a kick out of that, those of you who don't know a lot about inverse funds. But look at that 2-day chart hiking over, going down. Derivative oscillator, which has been losing downward momentum, heating up. Nice red down candle, deeper low. Looks beautiful. What does a half-day chart show us? Again, look at that. 1, 2, 3 days of nice down movement. Crossover going down back on the afternoon of Wednesday, and then just really hammering down on Thursday. But look at this 2-day recross. Remember when we called that? Talked about shorting 20-year bonds. They went down for 4 days nicely, then tracked sideways for 6 days, and then they rolled over and headed down. Quite nice. What was your jumping in point for your short trade? Somewhere around the 168.36 mark. What's the low? 161.16. That's pretty nice, pretty nice. And again, please be aware that the inverse funds attempt to track, they try to go in the opposite direction of the underlying fund that they track, percentage-wise. The prices may be different, but they try to track the same percentage. If TLT goes up, or like in this instance goes down 1.7%, TBF attempts to go up for the day 1.70%. So again, tries to do the opposite. Now remember, those can be revalued on a daily basis. They also have a high overhead. So there are costs to doing it. That's why we want you to practice trade it, see if you like it. If you don't like it, then of course you've got other options, just not to do anything, get out, make your profit, let things drop, buy back in at the right price. The good thing about being an individual and not someone on Wall Street is you don't have to trade. Sometimes they have to move their money around. You don't have to. And if there's no trade to be had, then guess what? You don't take the risk. You take the risk when you see the opportunity and all the bells are going off, like a weekly vertical crossover, like a 2-day recross that you know works. So please, again, practice, practice, practice. We're not a stock calling service. We're an education firm. Let's go to gold. Gold down for the day 1.16%. Now, we don't have a crossover going down yet, but we have seen here for a while price percent oscillators heading down. Derivative oscillator peaked all the way back on the week ending the 7th of August. And we have seen things just sort of deteriorate as we look at the candles. Price percent oscillator is still up, so we don't have a crossover going down. We're waiting for a potential weekly vertical crossover or a 2-day recross going back up, but it's not looking like that right now. We had that 2-day crossover going down back on Wednesday the 19th of August, and we've seen things again deteriorate as they've slid sideways for the last 6 trading days. Price percent oscillator gaining downward momentum, derivative oscillator gaining downward momentum. Half-day chart, we saw where things sort of bottomed, then slid sideways and up on Wednesday and then down on Thursday. Not enough energy to have a half-day crossover going up. So we'll continue to watch, see what there is to see there on gold. We don't have a trade on gold now. Why? Because the 2-day is moving inverse to the weekly. Remember, one of our rules is the 2-day and the weekly have to be moving in the same direction. So what happens in a situation like we're in right now where there's a stalemate is either the weekly has to cross over going down or the 2-day has to recross going up. That's where we are, folks. God bless. All the best from the whole team at Charting Wealth World Headquarters. Guess what I have on my desk? I have we got them in a day early. I have the 6th printing of the 2nd edition of Charting Your Way to Wealth. You want a copy? We've got an autographed copy just for you. Wherever you are in the world, follow the link in the show notes. Buy the book. We'll ship it out to you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.